Scott Sperling, THL Partners co-CEO. Anything you can glean when Exxon does something like this, it's totally Exxon, is it not? In the energy picture, I don't know if it's a better time for.
Again, I think directionally they're making a bet for higher prices over a long period of time.
Andrew, is Lena Khan,
I don't think that's a bad bet.
Is Lena Khan
allow this?
Would this be something that is anti-competitive? Or is it mainly tech and things like that? I mean,
I don't think this is going to come under that. Maybe you could see the DOJ go after it.
I was going to say the DOJ.
Yeah, I think it's more of a DOJ case than an FTC case.
Because it's hard to get anything done. That's part of the reason.
It is the levels of uncertainty they've created in the market for M&A are, let's say, very high. The courts are bringing that back by effectively overruling them in many situations. But it certainly is one added uncertainty into a very uncertain, otherwise greatly uncertain period.
We can talk about the jobs number. Usually it's in relation to interest rates in the Fed. So I was going to say that you've got some gray hair. You have some beautiful shades, different shades of gray. Oh my God, that's a movie, isn't it? But you have different shades, which means you were around for normal interest rates for most of your life.
Yes.
So, interest rates were normalized. Are we okay?
Well, as I like to say to our younger partners that back when my wife and I got our first mortgage, we paid 17.5% back in the very early 1980s. And so looking at rates that are in the range that we have here are not so abnormal. In other words, it's not that this should be such a blip that it should then immediately come back down to the zero rates. That one could argue the anomaly was the last decade or so. And the forces that that have enabled that, the deflationary forces, are all reversing. So globalization, very cheap energy prices driven by the technology innovations, particularly here in the U.S., the hydraulic fracturing, the so-called fracking, that brought energy prices down. And it's not just energy,
all those things.
But oil and gas, as we know, is a feedstock for so many other products. So those are very deflationary forces. And the interest rates brought down the cost of capital dramatically. And the fact that the Fed expanded its balance sheet from about $1 trillion to well over $10 trillion and now sits about $8 trillion. So again, much higher than we saw historically. Those things are going away. And that suggests to me that whatever higher longer means, it's definitely going to be longer. And I suspect it's going to be maybe not quite as high as we have now, but they'll be higher.
But even though we're at the low end of the range that we're used to, it could still be really painful given debt to GDP and trying to finance the deficit.
So this is another one of those great uncertainties. Our government, in its wisdom, decided that the massive amounts of debt, so we've basically doubled our national debt in, the last 7 years or so, 7, 8 years, and we've tripled it in the last 15 or so years, and we finance that mostly short-term, short to very intermediate.
So it's like a dumb bank, like a mismatch.
So that's rolling off. It exacerbates all the problems we're seeing politically. So whatever we thought the risks were a few days ago, the events of the last couple of days have exacerbated those risks dramatically. And the nature of the solutions aren't as evident given what we're doing with the protection of entitlements in its entirety and expansion.
Yeah.
And then we're looking at a world where defense spending needs to go up. We are clearly way behind where we need to be in this particular world.
Right.
You're right.
And then now you're looking at discretionary spending being crowded out by these massive increases in government interest rates.
Just put it to what Joe just said, like a dumb bank, because that has me sitting here thinking a dumb bank with bad risk managers who are going to be sitting around watching some of this. Where does that get you? And by the way, we're going to throw them out every once in a while, put new ones in.
And
who are equally bad.
Right, exactly. Well, we're sitting here where our two most likely choices are ones that over 60-some-odd% of the American public says they don't want either. So it's a difficult political environment, to say the very least. You guys just had the conversations with Josh about the inability of bipartisanship to actually come into action when you really, really
Rubber
might
meets
need
the
it.
road, no way.
I'd like to be very hopeful in that arena, but it's hard to see too many silver linings.
And it's sort of, you have to be like Pollyanna to think it's going to improve. That's the problem.
The only thing you rely on is, we are the United States, and it tends to have worked out for us over long periods of time, no matter what. And I think you have to come back to innovation, the entrepreneurial spirit that really still typifies this country more than very many others.
You remember did you feel hopeless at the end of the 70s and the early 80s? I felt totally hopeless. Oil, and we were stuck. We had our hostages, our stagflation. The helicopters collided when we tried to get them out. What happened? Suddenly, something happened in like 1980.
Well, Ronald Reagan.
That's what I mean. There's no Reagan on the horizon. Who's on the horizon? Donald Trump.
Right.
And Joe Biden.
Right. As opposed to Ronald Reagan. And for whatever the personal issues, Bill Clinton was a very successful president.
Was.
Interestingly,
they had a successful Congress.
But
that all went together.
He is a Democrat who said I think it was the era of big government has ended, to paraphrase. I can't remember the exact quote, and who put in place policies that drove people to go back to work.
So why are you hopeful?
I'm an American. I believe in the country.
So, and does that translate?
Honestly, it really comes down to that.
Does that translate into what you're doing, either investing-wise or with businesses too? Like you take the opportunity, stop listening to all the concerns.
I think we're trying to invest in places that I think other secular growth drivers will overcome the issues that I've just mentioned, including. I still feel that we're more likely for a hardish landing than a soft landing. Partly because I haven't ever seen a soft landing. I've been through like 6 of these recessions, and every time somebody says, and a bunch of economists say, we're going to have a soft landing, including in 08, 09 period. So I'm less optimistic about that.